Today, Bitcoin holds around the $19,000 level. Tether makes a big change to its stablecoin reserves. And Ben McMillan of IDX Digital Assets breaks down the state of crypto markets. Welcome to CNBC's Crypto World. I'm Pippa Stevens. Let's take a look at today's prices. As of noon Eastern, Bitcoin held at about $19,000. Ether was back above $1,300, and Solana traded up around $30. Crypto markets have seen volatility following yesterday's hotter-than-expected inflation report. Immediately following the report's release, risk assets dropped sharply before reversing course later in the day and soaring. Crypto jumped yesterday, mirroring that movement in stocks. Investors have been closely watching inflation data for clues on whether the Fed will continue its aggressive rate hikes. Amid that uncertainty, Bitcoin and Ether are on pace for their fourth down week in the last 5. Okay, let's talk about the top stories. First up, the world's biggest stablecoin cut its commercial paper holdings to zero, replacing them with U.S. Treasury bills instead. In a blog post, Tether said the move is part of the stablecoin issuer's ongoing efforts to increase transparency and back its tokens with the most secure reserves in the market. This is all in an effort to ensure investor protection. Commercial paper is a type of short-term unsecured debt issued by companies, and it's considered to be less reliable than Treasury bills. The announcement comes 5 months after the collapse of Terra USD, which cost investors tens of billions of dollars and led to fallout across the crypto ecosystem. It also comes more than a year after Tether had to pay a multi-million-dollar fine following a legal battle with the New York Attorney General's office over concerns tied to the viability of its reserves. Data from CoinMarketCap shows that currently there are about 68.4 billion Tether tokens in circulation, and that's up from 2 billion 3 years ago. Next, crypto trading firm NYDIG is laying off about a third of its staff. The Wall Street Journal, citing people familiar with the matter, reported that 110 employees have been cut in an effort to trim expenses and narrow the company's focus to more promising business. The Bitcoin service company announced in December it raised $1 billion in funding to build an institutional-grade Bitcoin platform with the goal of expanding access to retail customers. However, since that fundraising round, the crypto market has plummeted. The reported layoffs are the latest in a slew of crypto job cuts, including at crypto exchange Gemini and Coinbase, as trading volume has dried up amid the so-called crypto winter. We reached out to NYDIG, but as of noon Eastern, we have not yet heard back. Last, an alleged crypto hacker has agreed to pay $22 million to his victim in an AT&T SIM swap case. That's according to CoinDesk, which pointed to a court filing in the Southern District of New York. Ellis Pinsky reportedly swindled crypto investor Michael Turpin out of millions when he was a high school senior. The scam happened through an intricate SIM swap scheme that targeted AT&T. SIM swapping happens when someone tricks a mobile carrier into transferring a target's phone number from a registered SIM card to one the hacker has. Turpin sued Pinsky 2 years ago, accusing the then 18-year-old of being the ringleader of a cyber crime scheme. He also sued his carrier AT&T Mobility, but CoinDesk reported that a California judge dismissed the punitive damages claim against the company. Now, we reached out to Pinsky's attorney and AT&T, but as of noon Eastern, we have not gotten comments from either. All right, for our main story of the day, we are going back to the markets. Traditional financial markets have been on a wild ride in recent weeks, reacting to every piece of new economic data. Crypto markets, though, not so much. Crypto World Sanae McKeel spoke to Ben McMillan of IDX Digital Assets to find out why crypto prices have been holding remarkably steady despite the ongoing macro volatility and what this means for investors.
Thanks for joining us, Ben. What do you make of what has been going on in the markets this week? I want to start out on volatility because while there have been some breaks above 20,000 and below 19,000, Bitcoin has really been just hanging in the $19,000 level for about a month now, at a time when the macro volatility is kind of all over the place. And nevertheless, Bitcoin is still kind of highly correlated to stocks and other, macro-driven risk assets. What do you make of that?
Yeah, I mean, that's kind of been this interesting story all year is, Bitcoin kind of pivoted away from this inflation hedge narrative into one of, trading more like a high multiple tech stock. QQQ is a good proxy. But interestingly, if you look at the last really 3 months, Bitcoin's actually, been relatively quiet, particularly in the last, month. As you said, the trading range has been very tight. I think that's emblematic of just a lot of the leverage being flushed out, a lot of the so-called weak hands being flushed out. And a lot of the risk assets have kind of moved out of Bitcoin, and we're left with it, starting to look like it might be forming a bottom here.
We got a couple of key inflation data points this week that at least the second one was a little bit market moving. What should we make of those catalysts as price drivers, knowing how quiet the volatility has actually kind of been?
Yeah, it's actually been very interesting to see how Bitcoin has responded to these CPI prints. Again, relative to something like the Nasdaq. I think all risk assets, Bitcoin has been trading like a risk asset all year, and all risk markets are kind of looking for a peak in, the Fed funds rate, a peak in inflation. And obviously that hasn't happened yet. I think what's interesting in particular is kind of the news out of the Bank of England in the last week or so. And, even if you look at Thursday's CPI print, the market rally, which looked like it was on the back of potentially, some language around a pivot in the ECB, that just goes to show you how much the market in general is kind of really looking for that turning point and potential, Fed pivot down the road. And I think Bitcoin in particular, as I mentioned, we've seen a lot of capitulation already happen. This has been a year in which Bitcoin has had its so-called Lehman moments with all these big blowups, which again has kind of flushed leverage out of the system. In the same way that ultimately, Bear and Lehman blowing up in 2008 was good for flushing excess leverage out of the system. Bitcoin's seen something similar. So now the question is, when does the risk bid come back into the markets? And that's where all eyes are kind of again really looking at the Fed and a peak in CPI and a peak in the Fed funds rate.
I don't want to oversimplify it, but is that kind of it? I mean, even if we get like another catalyst or, we find some new use case in crypto that's been developed, even with all of that, and looking at the headlines this week, BNY Mellon starting to custody crypto for their institutional clients. I feel like in another year that would have been big market moving news and you would have started to see, kind of an opening of the floodgates. It's not a good market for that though. So, are we, despite everything else, despite the fact that, kind of the drumbeat for institutional adoption of crypto does continue to get louder, it seems like, still just waiting?
No, I think that's exactly it. I mean, I think you hit the nail on the head. Is if you kind of, peel back the cover on all the macro news, which has been dominating the landscape, the outlook for crypto assets is actually really good. I mean, you've kind of slowly seen, like you said, kind of increasing institutional adoption. Coinbase signing a deal with BlackRock. Even the institutional investors that we talk to are starting to appreciate that this is much more like a potential internet play vis-a-vis, early 2000s. As opposed to just a digital version of gold, for example. You're starting to see more people talk about Web3. McKinsey came out with an article talking about kind of the disruptive potential for Web3 going forward. So all of this is very good for digital assets, but as you rightly pointed out, the macro backdrop right now is just weighing on everything. So I do think we're cautiously optimistic, and our models are all in cash currently, so we're not advocating that anybody necessarily kind of rush in and try and pick the bottom or buy the dip here. However, that said, when you look at kind of this groundswell of continued positive momentum in use cases, institutional adoption, I do think that when we get a normalization of markets, a risk appetite starting to come back in, you could see digital assets disproportionately benefit from that as people look forward for the truly disruptive plays going forward.
What are some of your clients saying about hacking activity? And I want to point out something from Chainalysis that they had out earlier this week. They said October is now the biggest month in the biggest year ever for hacking activity, with more than half the month still to go. So far this month, $718 million have been stolen from DeFi protocols. How much is that weighing on investors?
It's increasingly so. It's something that at the beginning of this year didn't really come up at all. It was much more about just the outright market volatility of digital assets. Now we're starting to get a lot of questions from our institutional clients about, best practices, concerns about hacks, questions about custody. Interestingly, if you go back, 12 months ago, a lot of folks that we spoke to in the institutional space, really wanted to hold, Bitcoin, a so-called spot form. They were worried about the excess roll costs of futures contracts. Now, we're seeing a lot more people appreciate the fact that they can get exposure to Bitcoin without having to deal with any, esoteric custody issues. They can have the CME as a trusted counterparty and trade the futures. And that's 100% a function of all these, hacks that have happened in the headlines. So it's definitely something that is weighing on the institutional community as they think about, not necessarily if to participate, but how to participate. Like I said, futures versus spot. And, it's something too that's going to, I think, weigh on, kind of true mainstream adoption. People are going to be concerned about, losing money in hacks until, a lot of this gets under control. So that is something the crypto community, really needs to address going forward.
Okay, that's all for Crypto World today, but we are back again on Monday and we'll see you then.